Live streaming is on.
All right. Good afternoon, everybody. It's Vent Trader here, and I'm, of course, joined by options trader Brandon Mars as we get ready for the latest edition of the Options Playbook. So, without any further ado, Brandon, how are you doing today, my friend?
No, I'm doing pretty well. How about yourself?
I can't complain. Just kind of watching this market here play out. I had posted my market thoughts yesterday that I just felt that it was a pretty empty move yesterday, and I wasn't really trusting it in terms of a solid bounce or or near term bottom at all. And we're certainly getting a rollover on that midday here. Still not a lot of volume. Most of the things that I'm seeing here, we got volume running at about 50% of the July volume. So I'm kind of keeping that in mind, but definitely a pretty neat and tidy pullback from my observations. But I'd be curious to hear what you're seeing out there in the market and some of the things that are kind of jumping off the page to you on the index basis.
Yeah, so I swear I wasn't slacking and cut and paste your notes, but I had kind of a similar comment in my morning notes today. Yeah, just you got that nice bounce, and yeah, I said in my notes this morning it was kind of funny. I was looking at you had Nvidia, Tesla, 7-8% up yesterday. Just those are kind of some of those days that potentially just suck people in and say, okay, the bottom is here. I got to jump in. So yeah, I was kind of in the same boat that we didn't have an all clear, and I kind of mentioned that I thought that we were going to have some FOMO from some people overnight and probably see a gap up and a fade, and that's kind of what we've seen here. And yeah, I think all of us expected kind of a choppy week with just the lower volumes in August, and you've got Jackson Hole right around the corner. But some of the trading today there's been some good trades, but some of it's been a little brutal. Some of these kind of quick rug pulls and moves have just been a little unpleasant throughout the day. So just trying to keep my head above water and preserve capital kind of day, I guess.
Yeah, no, I completely agree with the preserve capital. So I suppose on a preserve capital day, what does that generally entail for you? What are some of the actions you're taking and some of the basic setups that you're looking for?
Yeah, I mean, just really less trading. I'm just really not rushing to get anything right now, and I guess it's just maybe a little extra patience. Just looking at the indexes here as I'm talking, I mean, it's looked like they were going to try to go higher a couple times. They keep getting beat back down. You got to just kind of really have that conviction that we're going to actually move either, higher or lower. Again, you can do calls or puts, so it doesn't matter. But just kind of having a little bit more conviction in the trade, which I'm just not really finding today, unfortunately.
Yeah, no, I agree with that. And I guess, we're going to get into it a little bit deeper in this segment where we're going to talk about the put call ratio. But what are some of the things outside of that you kind of look for in terms of trying to gauge the temperature of the market from the option side of things? Like, is there anything in particular in different stocks that could be leadership or different price actions that you're seeing that gets you a little bit more cautious or perhaps points towards a little light at the end of the tunnel?
Yeah, I mean, for me, I try to look for some of the tricks as far as the price action goes. When you start getting those like big candles that are on lower volume, you just kind of maybe giving you that light at the end of the tunnel that, hey, we might be going down right now, but it's on the light volume. And I know you talk about this quite a bit where you get these rallies and you're pretty good at spotting them yourself of just not really seeing the conviction underneath the surface. So that's kind of one of the things that I look for, just as far as price action. And then I haven't really seen anything, too in particular on the options front. I mean, things I think I got to take a look here because I haven't looked in a few hours, but I think things have generally speaking been, fairly light. Even like Tesla yesterday, I mean, I was looking at that and, you would think that with a move like that, you'd see like a shockingly high number of options traded. And I mean, there was a high number because it trades a lot every day, but nothing that was really like jumping out at me at all. So, again, the dog days of summer, I guess.
Yeah, dog days of summer is pretty much about it, right? I mean, can't believe it's already August 22nd, right? It feels like 2023 just started at some juncture. But why don't we talk and segue a little bit into that Tesla trade that you had taken? I know you had said that it was going against you here, but there was some strong, technical setups that you were looking at. So why don't we take a little bit of a deeper dive into that particular one, and then we'll take a look at some of the names that you've been pointing out that are on your radar.
Yeah, so Tesla, I mean, that's probably a good place to just jump right in and say, just terrible timing on my behalf. There's just really no other way to put that. And I was excited about it today, coming into it because, as you said, a technical setup. I don't know if you can possibly throw up the daily chart there, or I'm
For
sorry, you already
Tesla?
did it there.
Yeah, I got that.
So obviously a big move yesterday. I always get a little hesitant to chase those, but if you look at that on the daily chart, that has an evening star setup. So going back to, let's see here. So you start that pattern on the 17th, which was Thursday. So you've got that big candle that's red and down, and then you've got that gap down, actually a doji candle, which makes the pattern even better in theory. And then the third day, yesterday, you've got that big move higher. So that's kind of I think that's a pretty rare candlestick setup, and generally speaking. And then I want to say probably even more rare if you talk about a stock like a Tesla. So this morning I was definitely on alert, as I mentioned, for some selling pressure to come in. We got it, and I just thought that we were going to see a little bit more of a bounce of people thinking that they missed out on the bottom of Tesla. So I jumped on it, and just frankly, I was just, timing was off and the market's gone down. But in theory, this should remain on people's call radar or long radar. Again, if the market melts down, then Tesla's probably going to get dragged down with it, as it usually does. But with that technical pattern, this should probably remain a somewhat stronger stock here, as long as the market doesn't totally melt down on us.
All right. So, I mean, one of the things that you've talked about here today, Brandon, is obviously you kind of cooling your heels a little bit on the trade and trying not to overtrade given what's in front of us right now. But what you have done a great job at doing here is providing the listeners with a number of different setups that are intriguing. And it's a little bit of caveat emptor, right? If the sub sees something that they like, by all means fire on it. But for you, you're just trying to hold out that patience. But let's go through some of these names, and they're definitely some of the bigger names out in the market, so people will certainly be interested to hear what you have to say on these. Starting off with Boeing, ticker symbol BA, of course. Keeping an eye out on that one for a possible breakout, right?
Yeah, so Boeing, you and I have talked about it a couple times, where it's just kind of news prone. And I was watching it yesterday, and I saw kind of some interesting buying volume come into it. And I kind of saw an intraday flag pattern off of that, and it piqued my interest and jumped onto it. And I got out this morning just because, one, we did see the selling pressure, and two, at the beginning of the day, it just saw these really quick, long upper wicks. So it got rejected pretty quickly. And I had a price target at 230 to start. And then potentially, if it got through that, the 20-day moving average around 232 and a half. So I ended up just, again, I've talked about this before. If I take anything overnight and it works out well for me, I'm usually a little quicker to take profits, and glad that I did, since we got a little bit of a breakdown here in the stock and in the market overall. But again, today I've seen just kind of some interesting volumes come into it throughout the day. Had like a nice flag pattern with some pretty big volume right around lunchtime, actually. Originally caught my attention. Like, let me just see here. I mean, it was trading about 67,000 shares in 5 minutes, and probably the average for the day is like 10,000 per 5 minutes. So caught my interest again. It's holding up pretty well here as the market pulls back. It's starting to approach that 230 area and just showing some strength today. And again, you never know with the news, but it just shows some activity that I just feel like all of a sudden they're going to announce something. So I'm definitely keeping an eye on that. And again, as long as the market doesn't melt down, I would imagine this would test, 230 and then the 20-day area.
All right. So you also had Home Depot HD, who recently, of course, reported earnings just last week. HD, I got it slipping down below the 20-day moving average, coming in right in the low end of this Bollinger Band. And that's something that I've been seeing in a lot of these charts, Brandon. I don't use the Bollinger Band as an exact location for where I expect things to bounce. What I kind of use it for is a running RSI, where I'm just kind of, if it's riding along the low end of that, I know that to be a little bit more cautious. So I'd be kind of curious to hear what your thoughts are on the HD setup for potential options trade here.
Yeah, I'm kind of the same with the Bollinger Band. I mean, that technical indicator can get a little tricky because it's funny if you read the specifics on Bollinger Band, it's like, all right, well, sometimes when it hits this sell and sometimes buy. So,
it's a very inexact science, to say the least, right?
so, I mean, I guess the same could be said about something like a moving average too. Sometimes you'll get a bounce, sometimes you'll get a breakdown. So I guess the same can be said about other technical indicators, but the Bollinger Band, I think, is funny sometimes. But
true. I used to have fun with our old tech trader over here, just talking about how the chart's in the eye of the beholder, basically.
yeah, no, I mean, it really is. I think if you put 10 technicians in a room, you'd probably get 10 different answers. So,
Yeah.
but anyway, on HD, so what caught my attention there is, on the daily chart, it looks like you got a little bit of a double top, starting with the top there at the end of July. And then it started to kind of test the neckline actually just yesterday and even closed below it. So yeah, a little cautious whenever you get to the bottom of the Bollinger Band. And again, it's holding up fairly well. And Lowe's had their earnings today. So, kind of like I said in my notes, if Lowe's was strong, I probably wouldn't be quite as interested in it. But it's really not. I mean, it's holding up because it's flat, but it's not really getting a whole lot of support here as Lowe's shoots pretty high for, I think that's a pretty big move for Lowe's off of earnings, if I'm not mistaken. So yeah, seeing that pressure there. I mean, if this keeps working down around the 323 area, in theory, I would think that this would break the pattern and would probably continue lower on us.
Yeah, I'd agree with that. Now Netflix is another one that you've been keeping an eye out on here, and this is probably a perfect example of what I was seeing a lot of yesterday, Brandon, and that is, stocks that had been slipping below the Bollinger Band or whatever, seen a little bit of a pop, and without a lot of other support levels nearby. And that's what I'm seeing in Netflix right now. So I'd be curious to hear what you're thinking about for Netflix on this current move.
Yeah, so for Netflix, I had it on my radar as a potential put today, but I mean it's been strong. And the reason that I said that as a potential put was I looked at all the big tech stocks or the Magnificent Seven, whatever you want to call them, and they were all up pretty good volume yesterday. I mean, some of which were well above their averages. And then Netflix, that bounce yesterday was well below it. So again, just feeling that, out of all the names, there might have been some weakness there. And, that it hasn't been the strongest stock since earnings anyway. And, as it's kind of sitting there floating around that 400 area, it just seems like a level if things really turn weak again in the stock in particular, that it could have a potential breakdown and, maybe go down to the 390 area and start testing that 100-day. But it's held up really, really well now. So it actually might even be a potential call here if the market can head back higher at some point.
All right, so we'll keep Netflix on the radar. Next up, another big mega cap tech name that people are following, Meta Platforms, of course, META. Very similar chart for Meta as with Netflix, I would say. So, what was it that's jumping out to you on Meta?
Yeah, I mean, that one just went on my radar yesterday because, like you said, I mean, you had some of those tech names hitting that lower Bollinger Band. Meta just started to seem, just a little overdone on the selling. Kind of similar to everything yesterday. I think part of the reason that we got the bounce, you just had some major stocks, that were getting a little bit oversold short term and starting to hit those lower Bollinger Bands. And I think we're just due for a bounce. And Meta obviously came off some very strong earnings, so thought it was a pretty good candidate. And I had a decent trade on it yesterday. It was really struggling with the 290 area, so I just cut and run. And kind of similar to the other stocks today, got that gap up and moved down the fade. But if it can get it back above 290, I would imagine that it would make a run at its 50-day. But it's struggling today, and it couldn't hold that 290, and it's made its way down. I guess we'll kind of see. It kind of looks like it wants to create a bottom right here, but again, I don't have a ton of conviction in that or this little bounce that we're seeing as I say this in the indexes.
And Goldman, obviously, banks under a little bit of pressure today with yet another downgrade. Now, Goldman's a perfect example of just riding that Bollinger Band down. That there's no bounce on this one at all. So I'd be curious as to your thoughts coming down to that 300 psych level, which has helped provide some support in the past. But what's jumping out to you on this Goldman chart that has you on your radar?
Yeah, and kind of like I said in my notes, like you said, just no bounce, and that's why I said in my notes this is an ugly chart. It just keeps grinding lower, and I saw that news this morning. So the bank's under pressure, so just that kind of became null and void here. But if you look though, in the last like 4 or 5 days, it's had some pretty high volume to it. And some of those bars were starting to get a little bit smaller. So that's a sign of some potential accumulation. We are starting to hit that oversold. Actually, we officially hit the oversold area today. And that move down is one of those really steep trend lines. I know that Jim talks about that, quite a bit in his morning comments. That those steep trend lines can be a little bit easier to break. And again, just that this was more of just looking for an oversold bounce, signs of some accumulation, getting oversold, and again, it would have just been a quick trade, nothing I'd go and throw my, entire 401k into or anything like that.
Oh, come on. You could throw the entire thing in on that one trade, no? You wouldn't recommend that?
Maybe if you do it real quick with a real tight stop.
I'd like to have a vision of that person when they put the trade on. Probably be reminiscent of that guy throwing up in his wolf costume that he had on making that Apple trade. I don't know if you ever saw the old video of that.
You actually sent that to me, and I will fully admit, especially as a young trader, I've made some stupid decisions, and I have about zero interest in that one these days. I'm getting
Right?
too old for it.
No, I hear you. I hear you. It's all about capital preservation, right? So
Exactly.
let's move on. So you got a pretty good uh, collection of different names here. You got the industrial and Boeing. You got the discretionary and Home Depot, Netflix on the tech discretionary side, Meta, of course, advertising, Goldman Financials, Checkpoint here on the cybersecurity side, which that's been off to a pretty good start this week with that Palo Alto surprise on Friday afternoon. I think everybody was just expecting them to tank, and they ended up beating, and that really gave a nice early boost to cybersecurity. We'll see if it can hold these gains. So I'm kind of curious to hear what you have to say about CHKP.
Yeah, that was one I really wanted to jump on the other day. It had a nice breakout. Unfortunately, it almost looks like it is a false breakout
Right.
with the upper wick there from yesterday. But it started off strong. Problem with that one, and I mentioned this in my notes, it barely trades any options, and it's only the monthlies. But I thought the setup was interesting. If you go back to the like end of July, beginning of August timeframe, you've got that just consolidation for about 7 days, right underneath the 132.5 level. And then you had that big move down and the climb up. Sometimes those big move down, they can be a head fake. Everybody waiting for the breakout, and then they pull the rug, they reload, and then they move higher. And through all this selling, checkpoints held up really, really well through all of it. I mean, you wouldn't even think that the market had pulled back if you were just looking at that chart. So, with that strength and kind of sitting underneath that 132.5, and you've maybe got a potential head fake where they reloaded, it seemed like it'd be a good breakout candidate. Again,
Where do you
it barely
stand now
trades
on
any
it?
options.
Where do you stand now on it?
I mean, I still like it. I mean,
Yeah,
it's like
I
Jim talks
agree.
about in his morning notes, and you've talked about it too. Like the longer that something coils and sits around a particular area, the more likely it is to break out. And even again today, I mean, we've got the markets that are slightly in the red here, and this is in the green. You got to imagine that maybe some sort of news or some other earnings piece from another competitor or something is just going to kickstart this. And I mean, you'd imagine that it would at least kind of make a quick move and test those highs from like the April timeframe.
Yeah, no, I mean the one chart that I've keep is the super value village one. I don't know if you follow IPOs, because how long does it take for options trading to kick in on IPOs? What's the usual time frame for that?
Oh, that's a good question. There's some actual technical parameters out there, I believe, because I used to work at an alternative investment firm, and we actually listed one of our deals. And one of the first questions I got asked, I haven't done that research in like 10 years, but I think it depends on like market cap and volume. I think that some of them start popping in like 5 days after, I believe, and then some of them will just never have options. There is a technical answer out there. I don't know it off the top of my head because I've been asked in 10 years though.
Okay. No problem. I couldn't remember what the exact guidelines were for it. That's why I was kind of curious. But SVV definitely setting up in that same format as checkpoints. So keep those two on the long radar if we do get a nice little market turnaround. And then to complete your checklist here, or your watch list, retailer Lululemon. Many would argue the best retailer on the market. Talk about a sideways trading direction here, basically between 370 to 395 over the last 2 months or so. What is it that's catching your attention on Lulu? Is it once again just the fact that it's being able to hold its ground while the rest of the market's seeing a bit of a pullback?
That is definitely one thing. The thing that really caught my attention was actually the ascending triangle that this thing has formed from basically the beginning of June. So it had that big earnings gap up, and it's just created a kind of a textbook ascending triangle. So, um, I guess this is a good learning example from an options standpoint. And I've talked about this in a few presentations in the past. This is one of the challenges with options. In theory, with Lulu holding up like this and creating that technical pattern, I would think that it would make a move higher, and it would probably be a pretty, I mean, from quick math here, you're probably talking a 30-point move if it breaks that pattern. It's just a matter of when. You could have bought options on this thing every day, and if timed right, you could have done well here and there, but you have just been flat. But it is just coiling, and I would imagine it would break. I don't think the Dick's news did it any justice today. I know it was down quite a bit earlier today, but looks like it's recovered. But yeah, I just, I like to trade triangles, and this is a good one.
All right. So we'll keep an eye out on that. That's it for your checklist, Brandon. But it's one of the things that we've talked a lot about some of the past few episodes has been the uh, post earnings setups and trading options going into earnings. So you had a list of a few names that you just kind of wanted to highlight that had recently reported. So I want to run down that with you, starting off with SOFI Technologies, and kind of interested to see SOFI just from this perspective. As you know, we're just about to talk about it. I'm getting hit with a Brookings report, uh, or bank rate report, I should say, that auto loan rejections have reached an all-time high, the Fed says. So that's just something to kind of keep in mind with SoFi. Is, we saw Macy's today creeping up with some of the consumer issues on credit and delinquencies on the rise there. So SoFi, that's going to be another name that you need to kind of watch some of that potential, especially as we start getting whatchamacallit, coming back online, student loan payments, of course. So I'd be curious, going through some of these names, what you were seeing in SoFi that piqued your attention.
Yeah, so SoFi had one of those big post earnings release candles with the little wick at the top. Always catches my attention. Obviously this is a name that's got a pretty big smorgasbord of traders to it, and it's caught the attention of the retail crowd at times. And yeah, like you said, with news like that today and some of the stuff with the student loans and stuff, it's certainly volatile. But it just kind of seemed like it was almost trying to like create this very long, not exactly textbook flag-like pattern, and almost looked like it was starting to create a little bit of a rounded bottom here. So obviously to be determined, since it's only halfway created, but kind of looks like it's starting to create that rounded bottom. And I would think, as long as, again, the market doesn't melt down, if we see some strength, you would think that the 9 level, which is the 20-day and the 50-day, would kind of start acting like a magnet based upon the stock price. And it should at least create a good trade. Again, with something like this, I'd probably wait for some sort of news catalyst that would get it there, or for the market to turn, because I think this one gets caught up pretty well with the market downturns.
Well, the problem with waiting for the news catalyst is, chances are, unless you see that alert come right off the bat, that thing's moving before you even have a chance to trade it, right? So
That's a very, very good point.
So,
Yeah.
so, so I guess my question would be is, one of the things that I look for in my trading setups is falsifiability, right? So, and I feel like a break below 789 there, which would be the lows from last week, would let me know that I'm wrong on this getting up to the 20-50 day moving average. So I guess the question I would have for you is on your options trading, when you're looking at kind of the chart of the options prices there, do you do the same thing? Do you have certain levels where you're just like, okay, I feel comfortable taking this trade? Because right now you're talking about getting back up to 9.15, which is about $1, and from using that 789 level, you're risking about 27. So for me, that's about a 4-to-1 risk reward ratio, which is perfect in my opinion. I generally look for at least 2-to-1. 4-to-1's fantastic. So are you doing the same thing when you're kind of looking at the options pricing there, Brandon?
For me, it's probably a little bit more of breakout levels, like the Lulu triangle. You're going to have certain technical parameters that if a pattern comes to fruition, then it should move X amount of points. Or like a SoFi. I mean, sometimes the stocks that are under 10, I think, can sometimes be a little tricky on the options front. So for me, if it was more at like an, let's call it 850 level, and things were starting to look a little stronger. And then I see those moving averages there as the potential like magnet. That's kind of what gets me drawn to like, all right, let's go into the 9 strike on the option. And, you know, again, with these low, I don't want to say low price, but under 10, you know, your 9 strike right now, you're going to buy it for 2 cents. So, you know, it might seem attractive, but it's usually 2 cents for a reason, as I've talked about in the past.
Yeah. Okay. No, that makes total sense. Let me ask you for your next one, Caterpillar, CAT. Been noticing some weakness in this one and Deer. So again, curious to kind of hear your thoughts about it as we move a little bit further away from earnings.
Yeah, this one's just a really interesting learning technical chart. And, you know, Jim does a great job of this, talking about the inside bar through his conversations in the morning. So if you look from the earnings, August 1st, it had that real nice big gap up, and it had a really beautiful bullish candle. And it's just since come back down. And I think we're on, what did I count earlier, 15 inside days. So, you know, when you get that many inside days, in theory, the move either higher or lower is usually going to be pretty strong. I'm a little surprised in the weakness in this, in the fact that it's breaking below that at this point, because it is now set to close below the mother bar from the earnings release. I would think it would go and fill the gap from the earnings, you know, around 265. And then I don't know. I would think that it would see some pretty good support there. That's probably something I would have, you know, on my radar. I know you know this stock 10 times better than I do, but just I would imagine that after that big move higher and that many inside days, that it would probably make a nice bounce off that area.
Yeah, I mean, I think the fundamentals are still there for it for sure. Uh, it's so odd because one of the biggest issues that I think I'm having and the market's having right now is you're seeing those yields go up, and part of the time it's because because the economy's so strong that yields have to go up because the Fed's going to have to raise, and then the other half you see that yields are going up because people are panicking out there, and that Caterpillar is getting hit because the global economy is so weak. So uh, Caterpillar, Deer, they're just weird names for me that I don't know what to make of it. And I got to be honest, when when I see a stock kind of moving against the fundamentals, that always has me a little nervous because you know you're kind of at that point. What happens when the fundamentals do erode, and how's the stock going to react, right? So for me, I always kind of am cautious when I see something just not acting the way it should, because that just tells me that somebody else knows something more than me.
Yeah, I would agree. And you know, if you look at that, I mean, with those many inside days, it's kind of nice when it gets the bounce and it heads back up, because it was basically a bunch of people reloading on the way down, and usually makes a pretty nice breakout. But the fact that it is finally, and again, we got some trading left here, but it looks set to close below that just, it's a little surprising for me. So I'm going to be in the same boat with you, where I'm a little cautious because of that.
Yeah, especially when you're just looking down below and you got the 50 sitting below some good levels, and that's what I'm seeing a lot of in this market, Brandon. Just buyers on strike. Everybody that's out there that kind of missed the move, now they're like, well, now I can wait because it's going to come back to me. And I really feel like we've seen a lot of that. And it's going to be something that we'll talk a little bit about in the put call ratio too. But Shopify, Brandon, that's the next one you had up on your list here.
Yeah, Shopify. So that was actually one I had to play on last week. So yeah, after earnings got hit pretty hard there, and made that move down at the beginning of August, and then just kind of held on to that 55 level. You know, so again, just kind of a learning technique here on the chart. You know, you make that move down, you sit there and you consolidate, you know, at a particular level, and then if it breaks, you know, it tends to make a pretty strong break. And in this case, you've got a gap to fill from May 3rd. So, between that and having the 200-day a little below the 50 level, I talk about magnets a lot. You got two potential magnets that could keep this going down, and then you get a move up today, and if you potentially go and retest that 55 area, especially if the market remains weak, you would think this would be a pretty good candidate to roll over and start heading towards those two lower levels.
All right. And then final one that we have on another cybersecurity play, Fortinet FTNT. Now, this one, of course, had a terrible earnings report. We talked about the gap down. It's obviously well past T+2, but it's just been unable to find any traction above the 200-day moving average. It's a thick red line, of course, here, right around that 61.73 area. So what are you seeing in Fortinet that's piqued your interest?
Yeah, and for full disclosure, I've never actually traded this one from an options perspective, so I actually don't know how great of a trader it is. But again, from a technical standpoint, I thought there were some good learning points on the chart. So, yeah, had that big move down, and again, started to have a couple of inside days, and then on August 10th, when it went and tested that 200-day that you just mentioned, it saw rejection there, and it's worked its way back down. And usually when you see a stock like that, that's kind of in the downtrend, and it looks like it's gonna, break that downtrend, but it rejects, and then you continue on with basically those inside bars. That's usually a pretty good head fake, and one of the best times to go short, or buy puts. And again, it's made its way down, and we'll see. It made a little, I'd say, a little feeble bounce yesterday when the market was strong. I mean, that's on high volume, kind of a doji candle, and really didn't go anywhere. So if it breaks down and starts to test the close or the lows of that big down day from post earnings, that's a very good candidate to take another leg lower, and could probably become a pretty good short.
All right, so keep that one on your short radar there. All right, Brandon, that does it for that section of the discussion here. Now we're going to get into the educational side of things, if you will. And the topic we're going to discuss today is the put call ratio. And I know that a lot of people have a pretty fair idea out there about the put call ratio. We talk about it all the time, from Brett to Jim to myself. And obviously Brandon on the options trading side of things. But Brandon's going to kind of go in a little bit deeper into it and talk about some of the things you're looking at, some of the things that we're reading, and try to flesh out exactly what that means for the market. So, Brandon, without any further ado, let's break into this put call ratio 101 here.
Yeah, so sorry if this is a mediocre topic for anybody out there, because like you said, it is talked about a lot. But I know that there are a lot
It's
of.
talked about a lot, but I don't think it's discussed in depth enough to really kind of highlight exactly what we're referencing. So I do think it's a pretty good topic myself. Of course, I'm a bit of a nerd too. So.
All right, well, perfect. Yeah, I feel better now, so that's all that matters. So, yeah. So the put call ratio, and the reason that I, just thought this might be a timely topic is, like you said, it's been talked about by yourself and by Brett and in the room, and the reason I think it's timely right now is the ratio just spiked above 1. And that is the first time that that has happened since April. So, for me, a spike above 1, isn't. I don't think it's too earth shattering. It's something to be mindful of. It's not like an extreme ratio. But again, I think it's maybe been popping up in articles more, and it's shown up in the room a little bit more. So just kind of thought it was a timely topic. So, again, this might be a refresher, but what is the put call ratio? It's just simply a measure that traders use to gauge the mood of the market. So, if people are out there buying more calls, or excuse me, more puts than calls, it means that the bearish sentiment is rising. So that's what we're getting right now with the move above 1. And if people are out there buying more calls than puts, it suggests a bullish sentiment. So for us to, again, you've probably seen it in the room, just a reminder that under the OPTNX trader, it comes out twice during the day. It comes out during the early and the unusual options activity in the room. And then for me, I look at, stocks on an individual basis in the put call ratio. I personally get those from my broker, TD Ameritrade. Just in the options chain, they have a little thing in the bottom right that shows your sizzle index for options and calls and puts, and then it does give you a put call ratio each day on each stock.
All right. Let me ask you this. So obviously it's just put or calls divided by or puts divided by call, right? So there can be a little bit of fluctuation at the beginning, and this is something that we highlight just when there's a little less volume. So is there a certain part of the day that you're like, okay, now I feel like we've got enough volume in here that I feel a little bit more comfortable doing this? Because obviously at this first start, if you get somebody that's buying a ton of puts, that's going to kind of offset the ratio at the start, and then you'll slowly start to see it erode. Is there a certain time frame where you think there's a big enough sample size that you could get a truly meaningful read from it?
I mean, I think probably by lunch. I think though also at the same time, you're absolutely correct. The numbers can get very, very skewed out of the gate. But, if all of a sudden we were to, open up our trading accounts and then the day starts and all of a sudden you saw this really maybe coupled with some unusual option activity where all of a sudden, it spiked up and you saw that somebody was, buying huge blocks or something and creating that skew. I'm not saying just go and jump right into it, but maybe that's something that's worth keeping on the radar. Like, why is some institution buying, 5,000 block, call options of, this particular stock at 9:31 in the morning? Maybe that's a sign that we're going to run. And, I say 5,000, if we're talking NVIDIA or something like that, take that with a grain of salt. But again, just kind of finding that unusual options activity is always something that kind of piques my interest.
Okay, and tell us a little bit about the importance of the 0.7 timeline.
Yeah, so the 0.7, so a ratio of 1 obviously means that there's an equal amount of puts and calls being bought. So it might not actually seem like a bearish sentiment, but generally speaking, you're going to have more call volume in the market. So some people use the 0.7 as a baseline as opposed to 1. So basically, some traders will look at it and say, all right, anytime we hit 0.7 or above, the sentiment is becoming, bearish for me. I I personally like to use 1 a little bit more myself, just because I think it's a little bit of a stronger indicator of the overall mood. But the 0.7 baseline is used by some traders.
All right. So let me ask you this then. So in general, when you come in, do you look at that every day? Like, are you kind of just using that as your North Star for getting a gauge of sentiment?
Yeah, I mean, I just kind of take a look at it and make sure I'm not seeing any sort of, ratios that are, earth shattering. Again, I try to keep an eye on it too when I do my nightly research of the individual stocks. So, for me, it's not like, when all of a sudden it hit 1, I'm not just walking in and all of a sudden, going to start buying puts or, buying calls because of the ratio. But when you start to reach some of those levels, again, like we talked about the bounce yesterday, you all of a sudden you got your put call ratio, it's going north of 1, things are looking, a little oversold. You've got some of the big names that are hitting those Bollinger Bands. When you start piecing those things all together, I think it starts to, paint a picture for you for at least, a day or two of trading.
All right. So obviously you're using this as a bit of a sentiment gauge. And generally, if you see a spike in this number above one, like you said, that just shows that people are getting a little bit more cautious. But I suppose there's two ways of getting cautious here. One is buying the downside protection, right? Buying the puts. The other is simply like what we were talking about earlier, which is the trading environment and holding off on trades. And in this scenario, holding off on buying calls, which would obviously also inflate the put call ratio. How do you differentiate between that price action, if at all?
That's a good question. So I like to again, I'll look at the overall number for the market mood, and then for me, I really like to drill down. Obviously, I want to follow what the indexes are doing and try to not bet against them, too much. Sometimes I do it, we all do, but for me, what catches my attention is when I start to look at the individual stocks. TD does a great job with just their call and their put sizzle index. So, if all of a sudden, I don't know, let's take Nvidia since that's going to be probably the story stock here. So, put call ratio of 0.634 today. So, in theory, that would say people are a little bullish. Then you can drill down in that particular case. And again, these numbers will change throughout the day. But as of right now, the call sizzle index, or how many calls are being bought today versus normal activity, is at 1.23. So nothing too earth shattering. But if all of a sudden I see, all right, the put call ratio, is skewed this way, but then you actually see the corresponding volume correspond to it, that's what kind of catches my attention.
All right. And one of the things that you'll see is things going in front of a big event where you see the lack of call buying. So obviously we've got NVIDIA earnings tomorrow and Jackson Hole at the end of the week. So is that factoring into your read on this put call ratio right here?
Yeah, I mean, I guess NVIDIA was maybe a great and terrible example just because it is going to be skewed by that earnings. And when you get to earnings of the events too, you're going to have your spread traders in there and you're going to have your hedges in there, and it can get a little tougher to read. So on something like the event or the earnings, what really kind of catches my attention is like, all right, NVIDIA's, let's say it's not earnings. It's like, all right, NVIDIA's got investor day coming up. It's got a very low put to call ratio. It's showing, 2 to 3 times normal call volume. That could be a total head fake at the end of the day. But then all of a sudden I'm like, all right, well, that's some pretty serious bullishness out there. That's some pretty serious activity. That's what kind of catches my attention, that, somebody might know something out there.
Yeah, no, that's definitely something that you want to keep an eye out on. So again, we'll be watching this now. Another thing that chart is basically got to choose between is following the equity index, or either an equity, an index, or a total option volume on these. I mean, the usual line of thought is index options are the professional traders using that more as to offset their broader portfolios, while equity options are associated with more retail traders there. Now, I know you told me in the back that you generally use the total, which encompasses both and that's the chart that I've got up right now. That's the composite ratio. But do you differentiate between an equity versus an index versus a total option put call ratio when you're following things? And do you infer different things from these?
I haven't. As I kind of mentioned to you, I've always just kind of looked at the total for just kind of the overall sentiment. I guess I got to do my homework tonight when I get off the call and the market closes to maybe join the professional traders and start looking at some of the other ones. I mean, I guess for me too with the indexes, and I mean, it's great information on overall mood and potential direction, but I barely trade the indexes, which I would do, via the SPY or the
Sure.
QQQ. So I think that's, again, just kind of, I probably get most interested when I see options volume and activity on the individual stocks, as opposed to the overall indexes and even the total. Because right at the end of the
Well, and,
day,
and and the total, like you said, I mean, and by no means am I trying to insult anybody there if they are using the equity only. I mean, the total would be the market, right? Because that's giving you the full retail and the professional. I guess you could look at it as smart money versus dumb money, which again, I also think is just kind of insulting. But what I look at it more for is where's the big money, right?
Mhm.
I mean, just because you have a lot of money doesn't make you any smarter than anybody. Doesn't make you dumber either, I suppose. It's just interesting to see the different type of options, volumes, and potential inferences that people could have from it. So that's kind of my what piques my interest on that particular topic.
Yeah, no, I would totally agree with you. And for me, kind of going back to finish my thought on like the individual stock basis, at the end of the day, the total or the index or the equity, whatever measure could be whatever number. For me, if I'm going to trade an individual stock and I find something interesting on that one in particular, that's probably going to guide me more than some, total overall market number. Um, Obviously, if things are, about to fall off a cliff in the indexes and I see, 10 times the amount of call volume traded on Nvidia, well, again, I might not want to put my 401k into that particular trade, but, that's probably going to guide me a little bit more than the overall total put call ratio.
Yeah, and I guess that would probably be my next question for you. In terms of, it is viewed as a contrarian indicator. So, what would be some of the levels that you're like, okay, this seems like a little bit of a top to me. Like, I know we on the set I talk a lot about like if I see it get up to 1.3 or something. For me, that usually means okay, people have bought their downside protection and everything. So I'd just be curious as how you kind of look at it from a contrarian indicator standpoint.
Yeah, if I started to see that level, I'd agree with you. I'd probably start to get pretty interested in being a contrarian. And doing a little bit of research for this topic, I was looking and the ratio hit 2 at the end of 2022. That would obviously very, very much intrigue me. Um, and, sure enough, or maybe not sure enough, since nothing's for sure in this game of ours. Um, but the Nasdaq had its best first half of the year in 40 years after that put call ratio hit 2. And we could probably come up with a whole different host of reasons as to why that happened. With the new year coming in, but at the end of the day, it is interesting. You hit those extreme levels, and then all of a sudden, you just have this huge market run in the first half of the year. So yeah, I mean, I think again, I think one's kind of like, all right, well, there's definitely some bearishness out there. I don't think it's anything extreme, right? I mean, we've had a very, very, very strong market run and we had a little bit of profit taking and people are buying some insurance. So, nothing extreme there, 1.3, 1.5, then I'm starting to get pretty interested and, definitely a 2 would really catch my attention.
All right. And then the last question I'm going to have for you, Brandon, is obviously things could get pretty spiky pretty quickly there. Do you use moving averages a lot for these? And if so, which ones do you use?
So I use a lot of moving averages on my different charts. So I use the 5, the 10, the 20, the 50, the 100, and the 200. So I've got quite a few lines that keep me up at night on my charts.
Is there any in particular that you kind of using a little bit more religiously? I guess I would ask then.
So I like to use the 20-day, the mid Bollinger Band, if you will, just because I think that really kind of sets the sentiment for where traders, and algorithms are based strictly off of the 20. There are
Yeah.
certain algorithms that won't buy a stock if it's below the 20 days. So again, not going to say that you can't find a good trade when you find the bottom of a stock, during a dip, but the 20-day is kind of a gauge that I use a lot of, just whether it's got some strength or weakness to it. The other one that I really like to use is actually the 5 and the 10. An old trick that the guy I learned from taught me. Anytime you have a 5-10 moving day cross, if you go and study these charts and you look at them enough, you start to find that when the 5 crosses the 10 and then they remain in that order, you can usually follow that trend until they start to move and recross each other. So that's just kind of a short-term thing. And, when like sometimes it gets hard if the market's going down and, you want to buy a bounce like yesterday. Your 5 day is usually going to be pointed down. So is your 10-day. But just using those as kind of which direction they're facing gives, a really good short-term sense of what the short-term direction of a particular stock is.
All right. I think that does it for all the questions that I have for you then. Anything that you wanted to mention in parting that we didn't discuss?
No, I think that's it. I mean, just I guess I'll just kind of point out. I mean, I think anyone who's read my notes in the morning, I do sometimes put call ratios in my notes. Like actually, Goldman. I can't believe I didn't even mention that when talking about it. We were talking about the put call ratio. So,
Well, somebody wrote in to thank you for the Goldman trade. So, or the idea at least, anyway.
Okay, excellent. Yeah. So yesterday it had 1.842 times normal call volume. So actually that wasn't the put call ratio. But sometimes I will put the just any sort of unusual option activity that I see volume wise, and then sometimes if some of the put call ratios catch my attention, I'll put them in there. And again, it's not always a perfect science. Goldman showing elevated call volume yesterday is not a, go and drop everything, put your money into it, but it is something, to be mindful of and be on the lookout for.
All right. Well, Brandon, as per usual, thanks for taking the time to come down and chat with us here on audio. It's always great to get your vantage on what's going on in the markets, especially from the option side of things. So with that, we'll let you get back to picking out your trades. You've been doing a fantastic job on that, and we'll get back to running audio over here and looking out for them. So you take care of yourself, Brandon. We'll talk to you soon. And everybody else, we're going to just be shutting down audio for a quick moment. I will have the recording of this posted here shortly.
Thanks, Gavin. Appreciate it.
No problem. Take care of yourself, Brandon.